We're going to start immediately. It's all about partners in growth. We're living in trying times right around the world. They seem to be getting more challenging, and they seem to be under more and more uncertainty with what Putin is doing, sending trains down to Ukraine with nuclear capacity, and Kim Jong-un firing missiles across and over Japan. And all the saber rattling is very unnerving. And within all of that, there's real opportunity for adept thinkers, growth-minded thinkers, and people who want to make a difference. And we met a couple of them because of 10,000 companies that we surveyed with our partners across the United Kingdom, Northern Europe, South Africa, and in the United States. And when I refer to mid-tier companies, I'm talking to established companies. Average age was about 17 years established. Average age of the business owners was a young, vibrant 51, so they had been in the game for a while. We discovered that 88% of them said, yes, we absolutely want to grow. And it got me thinking, how is it possible that you could not want to grow? Because the nature of business as such is if you're not growing, you're dying. So then what defines growth? Surely growth should define something over and above what maintains your current value. We've all invested time. We've made massive sacrifices to family, to health in certain cases. We've taken risks. We've poured money into our businesses. They're at a certain place in space. They're at a certain value. You want to maintain that value. So to maintain that value becomes an interesting discussion, because maintaining value means that you need to be growing at a minimum of inflation, which is rising right around the world. So 8, 9, 10, 11, 12%, depending where you are. Holland is sitting at just off 12%. The UK is sitting just off 9. South Africa is sitting at about 6.5, 7. The United States is bumping in and around 6 and 8. So take inflation, take the industry growth rate, take your country's GDP growth rate, add them all together, and then think about the currency. Take your currency depreciation as well. Add that number too. And that gives you what you need in order to maintain what you have. 1% more per annum growth means you're growing. If you get that number and you aggregate those numbers together, that's what you need to be driving in order to preserve what you have. What was interesting about these businesses, because we spent time with them, we discovered it's not working because many of the business owners and leadership teams relied on hope. We learned that 14.7% of them committed an hour a month at least to talk about growth, not driving out growth plans, not spending detailed, concentrated energy, focus, and time on looking at what will get growth and how to get that growth, but talking about growth. From an employee awareness point of view, 95% of these businesses had employees that when we interviewed them were unaware of the growth strategy, the growth plan, the growth intent. They were simply providing functional work for the organizations that paid them a monthly check. When we did a deeper dive and looked at the gears that drive a business, how you market the business to tell the world you exist, how you then engage that world who's interested in what you have to offer through sales, how you then fulfill your promises through operations and administration, and then how you bill and account for it all. Those gears, 68% of them were misaligned. So the client experience, the customer experience, which is what wins in an economy today, was broken as people traverse through the various gears of the business itself. A lot of them sought help but never got any help. They went for often growth as an outcome, which was the intent of a mid-tier business owner, and instead what they got was advice. 88.6%. Of those that got the advice, just under 5% were able to implement it. Advice is interesting, because how do you tell someone who knows the industry about the industry and give them insights into what they don't know? Yes, you can work on mindset, as coaches do, but that gets you only so far. How do you conjure up and understand how to grow a company, turn it into a plan, and then most importantly, get the entire organization to adopt it and therefore to execute it? It's no wonder that across the board, we estimate that 98.7% of those businesses, the average age being 17 years, would not last 6 months without the owner and leadership team. Globally, around the world, about 94.6% of businesses that have been very good income generators fail to sell, and it's no different in family succession. The numbers are dire. My name is Pavlo Phitidis. I'm a co-founder of Aurik. My history is I've done 2 turnarounds. I've been involved in the buy side and sell side M&A space, where you buy companies and sell companies on behalf of other companies. I had a family business succession and sale. I've done extensive work for MBA schools on company valuations, and I have started, built, and sold 12 companies which underpin Aurik. I'm also an author of 2 books. Aurik operates across 4 main domains: the United Kingdom, Northern Europe specifically, the United States, South Africa. And what's important to note is that we are not consultants. We are not advisors. We are not coaches, and we're not trainers. We are business growth partners, and we demonstrate that by linking 70% of our fees to growth as an outcome. It means that as a partner, we select our clients as much as they select us. We started the early years for about 9 years. We started, built, and sold 12 companies, and we had some mixed results. 2 failed dismally, 2 IPO'd, and were glorious and fantastic, with lots of celebration, ringing bells, clapping hands, drinking champagne. Helps you forget the failures. Well, not really. You never forget the failures, because that's where you learn the most. We sold 3 companies through management buyouts. So we sold it to our leadership teams, and we sold 5 companies to corporate buyers. And what was most important was that the last handful of businesses, for the same amount of value, came about in half the period of time and a third of the cost. It was profoundly insightful. We then unpicked what we had done in these 12 companies, and we began to piece together all the activities that were performed to bring a brand into a market through marketing, to generate leads through marketing, to understand how to convert leads into sales, to understand how to link that through to operational activities, fulfilling the promises we made, and to understand how all of that tied together into a billing administration process. We learned very quickly that there are 2 parts to a business. There is the product and the service, absolutely essential. If you don't have a good product, if you don't have a good service capability, you're not even in the game. You would not be a mid-tier company. You would not be established for very long. But that in itself forms part of the business. The part that we discovered over here and created a system to do was to overlay that with a commercial set of activities that create an exceptional client experience, delivered consistently and reliably, consuming only 30% of the time of the leaders in that business, so that remaining 70% could be focused on growth. We've worked with over 3,000 clients. The average annual compound revenue growth rates are sitting at 28.9%, and that includes the last 2 years of COVID. And most importantly, there have been some very, very nice profitability growth. We deliver only 2 outcomes today. Naomi, you sent me an email along these lines. 52% of all our clients are interested in the following. They have got traction, they want to scale, they want to grow, they want to dominate within the segment, both locally and internationally. And it's quite a bold word to say dominate, because one would imagine, how do you dominate a sector? Well, you don't dominate a sector, but within an industry, there are many, many, many different groups of clients or segments that you serve. Dominating 2, 3, 4 is imminently probable and imminently possible, both locally and internationally, if the business is built right. About 48% of our clients are saying we've been in the game for some time. We want to start looking towards an exit. We have built a brilliant income generator, and we recognize that a business that generates income alone is not necessarily a transactable, saleable asset. A saleable asset has three features to it. Income generation, absolutely critical. Capital appreciation, vital. And then finally, tradability. Remember the earlier stat, just on 98% of businesses without their owners there after 6 months have no value at all. How do you build a business that grows income, deepens profit, and can exist literally without you? Essential if you're looking for an exit. It leaves me with the question, and my question to you is, why do you do what you do? Essential to understand, absolutely critical to understand. I'm having a challenge with my technology. It's been a while. So the top challenges that came through with everyone who registered to be here, there were big issues in family business succession specifically from owners of businesses to next tier level leaders, by means of a way of exit, by means of a way of transferring operational and leadership responsibility from one generation to the next. How do you align family shareholders? Really hard. We know about this in the paint business, correct? How do you get succession right in a well-established family business? How do you transfer that responsibility from one tier to the next? It then bled on to people, because people are everything. Right around the world, there is a significant challenge with regard to human talent. How do you get the right people to do the right thing at the right time all the time? Unless you can get that done right, you can never deliver consistent, reliable experience across your client base. How do you align employees in the business to the goals of the business? Well, communicating them is a good start. But how do you then, once you've communicated the growth plan, the growth strategy, get it executed? There was a question here, how do you motivate staff to think like the founder? I fundamentally believe that in business today, the vision of the business, the future of the business, what the business does and why it does it, should be a co-created activity, not simply one designed by a few consultants who are identified by a few leaders and then pushed down the line, per se. How, in profitable growth, do you get to the next level of growth? It's actually not that hard to grow revenues. It's very hard to grow growth, revenues, and profits. Because in order to do so, that new revenue growth has to come off a moderated operational cost base. It's that new growth, if you moderate your costs, that will allow the profitability to yawn and open. How do you build a business to both sustain growth and revenues more reliably and certainty, especially in the world we live in today? And then there were lots of issues that arose around how do we ride the stormy seas out there? You know, we thought that after COVID, perhaps everything might return to some form of normality. Well, in the UK, we're suffering from Brexit and all the issues related to skill shortages there. In the US, we are suffering with massive inflation, which first bit over there and then became prevalent right around the world. Now we're all suffering from it. We have got big issues with climate change, bearing down on us. Just this morning, I was learning about the risk of coffee, which terrifies me, because a life without coffee is not worth living. But there were 138 species of coffee plants in the world, and only 2 today are even remotely viable, Arabica and Robusta. And Arabica, which the majority of us drink, is now under threat because of climate change. So how do we build a company that leads and proactively responds to change? As business leaders, it is our responsibility to get right. And I'm going to address all of these with you. Our journey ahead, we will talk to the problem of growth and we will talk to the solution. I want to take you into the future very briefly, because ultimately we're all going somewhere with our businesses. I'll share briefly with how we get it done should we work together. And then I have an invitation for you, which I dearly hope that you do pick up. I will have you out here at 5 minutes to the hour. It's my promise. And should I be needing to go over, I'll give you good reasons. And for those of you who need to leave, I do understand, but I want to leave no value on the table. I need to give it all across to you. To succeed, we need to resolve a number of impediments. The first is in leadership. How do we respond to a changing, noisy environment? And the noise has been driven by many things. Firstly, there's a massive fragmentation right across consumer and customer bases. That is the nature as such of the internet. There is massive political dissent that's dividing people and nations, making conversations even harder and harder to come by. There are issues with regard to how economies are being led. All the tax policies that have been recently introduced into the UK are causing a lot of disruption and uncertainty. In South Africa, there seems to be absolutely no economic strategy, with a completely incapable government to hold the economy in one direction. In the United States, really the lack of responsiveness that is being felt and experienced and spoken about with regard to the Biden administration is causing a lot of dismay. And in Northern Europe, there just seems to be nothing going on. It's an economy that's been moving sideways for some time. And within that environment, and with all these changes coming down the pipe and the pace at which they come down the pipe, how do we as business leaders give certainty around why we do what we do and transfer that across to our teams in order to hold it all together? Where do we find growth when things change so fast? Time. How do we create more time to lead and less time to do? By far, the majority of business owners and leaders that we speak to are caught up in the engine room of their businesses. They're involved square and center in daily, weekly, monthly operational activities. When you're so busy doing, how are you leading? How are you supporting the team, guiding the team, mentoring the team? How are you engendering a culture of what your company stands for? How are you identifying the areas of growth that bring both revenue and profit? Control. It's really hard to delegate responsibility. I think it's one of the most significant challenges we face in business. To get from one level to the next, you need to release yourself from daily, weekly, monthly operational activities. You do that by delegating to teams. How do you get it done so it sticks? And how do you get it done so that when a team does not perform as per the expectation, you're able to take it as an opportunity to build and grow the team rather than take over the responsibility itself again? Micromanaging destroys confidence in a business, and it prevents the business getting from one level to the next. It never serves you. When it comes to systems, how do you find win and hold customers? And what distinguishes your business from that of your competitors? The world of product features is dead and finished. Customers and clients do not respond to product features as a selling proposition, because any product features that you believe you have that distinguish you today, already your competitors have them too out of necessity. We'll talk to that. Operations. How do you deliver a consistent, reliable, predictable experience across your client base? For without that, you're unable to get from one level to the next. How you build your operations is key and fundamental to scale. And scale defined is where you have the opportunity for next level growth. And then finally, as spoken about earlier, team. How do you get the right people to do the right thing at the right time? About the future, growth in revenue without profit is not worth anything. It simply introduces more risk and complexity. If you are growing your revenues and you're not growing your rate of profitability, in other words, the percentage of revenue that reflects profit, not just the quantum of profit, there's something fundamentally flawed in your operating model. It's absolutely fixable. Are you building a job or an asset? If you are one of the 98.234% of businesses that cannot, without you being there, have a business sustain itself, in effect, truthfully, honestly, is it really a business? Because we assume a business to be an asset. Many of us work in our businesses in order to get the capital gain as a view to monetize the years of risk and investment that it's taken to get to where you might be 20, 30 years down the line. And then finally, wealth. How do you use your business to create wealth, a legacy for yourself? And I don't mean wealth only in monetary terms. I mean it in terms of your contribution, the legacy you leave behind. Should you be selling on to leadership and management? How do you put the position to them in such a fashion that the business you're leaving them with is something that they can take to the next level itself and create wealth for themselves in the process? We fundamentally believe that all of this can be solved through business design. And there's a very particular business design we've noticed winning in the market. It's got 5 layers, and the first piece to it always talks to, why do you do what you do? What makes your business special in the eyes of your customer? It has very little to do, as mentioned earlier, with the features of your product or the features of your service. Any product advantages or feature advantages are not easily sustained. The mere fact that we live and work in such a competitive market means that should you get a gizmo, a widget, or an additional element to your service that sets you apart for a short period of time, by definition, out of necessity, through the function of time and money alone, your competitors have to marry and match the same standard. Price advantages equally cannot be sustained. When people claim service advantages, and we do a deep dive in the business to understand it, often what we find is that that distinguishing personal service resides in a few individuals. It's not part of the instrument or the design or the structure of the business. It simply means without those key individuals, there is no service advantage any longer. You know, we worked extensively, I'll share a few case studies with you, with an organization in the United States that's involved in fire services. These are the folks who go and design, when you have a building and you do renovations or new builds, the fire systems that operate through the business. Very, very competitive space, lots of players in the market. They turn around and they said, how do we create an experience for our customers and clients that demonstrates our expertise? After a period of time in working with them, they had a very clever strategy that they deployed. They invited on a Saturday, during family time, the majority of their clients and asked them to bring their kids with them to a set place. They went into the basement of the building where they had set up fake offices. There were desks, there were filing cabinets, and everyone was asked to go and stand by one of the desks. Everybody was given an umbrella. They were given oilskins, raincoats, and wellies. So there, the heads of procurement, the facility managers, which are their clients, stood next to their desks. They lit a small fire and they triggered the fire alarm. And before you know it, every single workstation was drenched, despite the fact that there was only a small fire in the corner of the fake office. They then spoke about the cost of rehabilitating that particular office. They then replayed the exact same scene, and in doing so, when the fire lit, only the sprinkler system above the fire itself triggered. They created an experience of what they deliver that distinguishes them and sets them apart. And they did so in a fashion that it was a fun day for a family, which meant the next day at school, every kid spoke about it. The next day at work, every fire procurement facilities office manager spoke about it. Experiences are essential because it's what makes us support a brand or not. The product and the service you offer solves a problem, but the experience you create and how we learn about it and how you engage with us and how you then service us with the promise of your fulfillment is what builds a brand and actually grows a company. In the watch industry, expensive watches are always in the market. A Rolex is a Rolex is a Rolex. How do you set yourself apart as a supplier of Rolexes? In this particular instance, that client understood that beyond the Rolex itself, he solved 4 problems. He identified his customers and defined them as those that want collections and don't want to miss out on a collection every time a Rolex is released. He identified others as individuals who need to spend $50,000 to $100,000 on a wristwatch in order to demonstrate to the world that they've arrived. Perhaps those that might be a little less secure about their stature in life itself. He identified those that were investors that looked to buy watches on day 1 with the view to sell them in a different location on day 2, because the watches themselves held value as investment instruments. As he understood the 3 problems he solved, he understood specifically what experience to create every time someone walked into the store, and quickly evaluate, are you a collector, are you an investor, or are you a, let's call it money transferer per se. It changed the way of engagement with those clients. It changed the experience those clients had every time they walked into a store. And during the toughest times, post-2008, this was a business that was growing on average at 24.5% compound revenue year on year on year, all the way through to 2012. So experiences are what set you apart. If you know who you serve and you know what experience they want and how they learn about you, how you engage with them, and how they expect to be fulfilled by you, that guides how you build out the commercial system sets that drive a business. It guides the marketing activities and defines them into a set of activities put into a measurable sequence that can be taught to create the experience that the particular client segments you're serving want in order to learn about you. It is fundamentally different to lead generation. It is the experience of how I learn about you, how I deepen my familiarity with you, prior to me saying, please, I want to have a meeting with you. It then interlinks into the selling system. And the selling system itself equally is made up of activities put into a sequence that give a measured outcome. In all these cases, you're holding a golden thread that defines the experience that segment of clients needs and wants, as opposed to the golden thread of experience that a fundamentally different segment of clients need and want. Because if people buy based on the feeling they have towards you, but justify the purchase logically, we need to build companies that create the feelings and experiences that get customers engaged and involved. It is an entire process that begins with learning about you, engaging with you, being fulfilled by you, and then being managed by you. They, in their own right, see a commercial system that is entirely optimized in each of those functions and then integrated and interlinked. Building it in that manner also allows you to create a team that can lead and drive that on a day-to-day basis. We're working with a fascinating company based up in Leeds at the moment that puts together PC boards. They've got the anodes and the cathodes and the diodes and the capacitors. They've experienced significant growth of late, simply because of scarcity of supply. They operate right across Europe. And on close inspection, we learned that 38% of the revenue comes out of one individual located in Spain. We asked the company, what does he do that allows him to dominate such a significant part of your revenue? They shrugged their shoulders and said he's got a great personality. And it just left me thinking, gosh, 38% of your revenue coming from one individual, and you have not understood what he does, how he does it, the activities he performs, in order to create a system of selling that can then be applied across the Netherlands, Greece, Italy, France, and Germany, where they equally have offices. It's a massively lost opportunity. Systems allow you to, a systems mindset allows you to understand how those activities can come together. It allows you an opportunity to lift what they've learned in Spain and drop it across the rest of the European continent to marry and match the growth in revenues. It's a missed opportunity. So you achieve consistent, reliable experiences by building out the activities that are governed and defined by the positioning of your firm across your 3 or 4 or 5 different customer segments. Once you have gotten that right, you have the opportunity to bring a team on board and working with your team to run, implement, manage, lead, and innovate those systems. Because if when you employ people and you pick on the basis of culture and fit first, with the view to put people in a position of leadership or capability that is governed by a set of systems, which is in effect what you're delegating rather than just instructions, it allows you to identify individuals who can drive those system activities and sets in a fashion that they can take ownership, leadership, and control. It allows you to do so in a manner where you get the right culture and ethos of person on board into your organization with the view to incapacitate them and empower them on the back of delegated systems to create that absolutely consistent, predictable experience from client segment to client segment to client segment right across the board. Getting that right is absolutely essential. We're sitting in a situation, a fascinating example, again, based up in the north of England, where a business in the construction industry has come about through a family succession instance. This particular individual has been in the game for 30 years. He was brought into his business by his father, who was a builder, and he was brought in a fashion where he was told to go and work on site. And by working on site, he was told that he will learn the trade. He will gain the respect of the artisans that the business employs, so that over a period of time, he can move from the delivery side of the business into the leadership side of the business. He learned the trade and he gained the respect of the artisans. He was exceptional and remains exceptional at delivering the product and the service itself. The fundamental missing piece is that here is all this talent and skill in a business that does very strong, nice, reliable revenues, with the view to bring family members in on the same basis, as opposed to not only ensuring that you deliver the capability to manage the product and service, but you also deliver the capability to understand the commercial systems that will take that product and service to market at an accelerated level itself. Getting the right people to do the right thing at the right time means you need to work with the team in order to build the systems of delivery. And the systems of delivery need to be informed by how you position your company from an experience point of view across the 1, 2, or 3, or 4, 5 different segments that you choose to serve and dominate in an industry. Getting those three elements right are the technical definition that makes up scale in a business. It gives you consistent, reliable organic growth, the 10, 12, 15% that you will enjoy year on year on year, in a situation where it releases at least 70% of your time to focus on the next tier, which is next level growth. How do you grow revenue and profits? What does it take? I speak often about a baking business that we've worked with, who made the best and make arguably one of the best croissants globally. They argued that their croissant drives the growth. The fact that their croissant stands apart from the many other bakers out there in terms of quality and the experience of eating the croissant. In fact, what we learned very quickly is that the croissant only made up 25% of the purchase decision right across the hospitality industry. When you sell food products into large hotel groups, you're dealing with 4 different buyers. You're dealing with the food and beverage manager who looks at the quality of the product. You're dealing with the procurement manager who looks at occupational safety and health. You're dealing with the finance manager, no disrespect intended to anyone here, who wants everything for nothing now. and you're dealing with the HR manager who says, if I have to train my staff and upskill my staff to onboard you as a provider of the service or product, I will not support your onboarding. 4 different experiences needed to be created, targeting one element of client, the hotel group. The systems were built to resonate with the 4 individuals across the various hotel groups. Teams led the engagement across the 4 individuals, meeting their requirements in terms of understanding what problems they individually needed to have solved, and then building the system sets to deliver that consistently. It led to significant growth. It led to organic growth. It released the time of the business owner to then find the next level of growth. In doing so, what was essential is that it was achieved by not disrupting the positioning of the business, the systems of delivery, and the established team. This individual happened to find it in among supermarkets, where 365 days a year, much like hotels, they need fresh baked croissants for morning trade. A similar problem was being solved through creating a similar experience that was required, using the same set of systems of delivery with a team who was adept, able, and capable at leading and managing that set of systems of delivery. What it delivered was accelerated growth across the business, and most significantly, that new stream that came in from the supermarket industry came in on the back of a moderated cost base, and that led to a significant jump in the profitability of the business. With that in play, the last element that as leaders we need to focus on is, how do we secure the value? How do we ensure that what we're building can be transferred from one generation to the next, whether it be through family, whether it be through a management buyout, or whether it be through the sale of the business to an acquirer? Leaving a legacy after 10, 20, 30, 40 years of work matters to all. Leaving a future for everyone employed in an organization matters to all. It is us as mid-tier businesses that stitch together society and hold economies together to the benefit of all. In order to achieve this, it's fundamental that you meet the 3 criteria of an asset: income growth, capital appreciation, and importantly, independence. I can talk to a number of case studies here. In Virginia, we're working with a 56-year-old business that was acquired 54 years ago by its current owner, who turns 80 in April next year. He works 7 days a week in the business and has done so for 54 years. He loves what he does, believes in what he does, finds value in what he does. The business grew to a nice, healthy $60 million of revenue, producing around $12, $13 million of profit year on year. And over the last 5 years, it's slowly been eroded. It's been eroded because there has been no fresh growth strategy. It's been eroded because this individual is absolutely exhausted. It's been eroded because day to day, what was inspiring, what he loved, what he enjoyed, has slowly over the years become a slog. He's found himself in a position where today, without himself there, it's unlikely the business can last 2 months. At 80, he needs to retire, wants to retire, under massive pressure from his family to retire. On a deeper conversation I had with him, he turned around and he said, yeah, you know, the money's one thing we've done well to date, but I would hate to leave a 55-year career where I have been a significant influence right across the industry and sector in the United States, where I find my value and meaning in life in the work I do. I would hate to see a scenario where of a day, when I leave, there's nothing there to show for it. Building a business in a position where you have got positioning well defined so that you can dominate a few niches within the industry that you play in, and you can understand the experience that those niches would want, articulating them into an entire system of delivery through a purposeful team who can lead and drive and manage that system of delivery to release your time to focus on next level growth, and in a fashion to then transfer the responsibility of that to that tier of leadership, placing you in a position where without you, the business itself can continue, is the essence of what defines an asset of value. It's a purposeful life. It's a full life for any private business owner to have achieved. Yet 94.6% of companies out there fail to do so. I want to talk about that end there because it's something that comes to all of us. Across the world, average valuations run at anywhere between a 2 to 4 multiple of EBITDA, profit, with profit before tax, adding back depreciation and interest. It's the free cash in a business. Those valuations are going through fundamental shifts and changes at the moment. Rising interest rates, inflation have created a lot of new thinking around valuations. We're moving back to the good old-fashioned value-based investing logic, as opposed to hope and promise of all the unicorns that have governed the environment for 10, 15 years. It means if you're running a 10 million profit, your business is going to start with the valuation of in and around 30 million. It varies, as I mentioned, also from sector to sector and industry to industry. But take the profitability of your business. Think about it in your head. The free cash that your business generates on an annual basis, apply a 3 multiple to it, and that's the value of the business from a starting position. Buyers come on board, and the first thing they're going to do is look to depreciate the value of your business. You need to look to defend the valuation of your business. And the first set of questions that they ask is, what makes your business special? Beyond the product, beyond the service, what distinguishes you and sets you apart in your industry? Because if you look at your industry, you will see that there are many thousands of competitors who claim to do the same that you do, claim to do it better than you do, and claim to offer advantages that they don't necessarily offer, but are using marketing speak to try and get ahead of all the noise out there. If you can turn around and demonstrate that within that industry, you've identified 2 or 3 niches that you have deeply understood in terms of how your product or service solves the problem for them, how the problem comes about for them, how they look to solve the problem, the information they seek, when they seek it, how you deliver the information, how that information brings them to your door. And once they're at your door, how you deepen their trust and faith and confidence that you are the right provider, because there's a resonance in how you communicate with them and demonstrate to them that you can do what needs to be done to solve their problem. Upon servicing them, how you fulfill your promises through the operational delivery and supply of the product or service that has been expected in the early engagement process. How you then bill and administer and demonstrate that you are there in order to support the complete process itself. If you can demonstrate that and clearly define those 2 or 3 segments and quantify the 2 or 3 segments in the market that you serve and demonstrate that for year on year, you've deepened ownership of those 3 segments, you're giving evidence of the fact that you're a business that's built to solve a problem for well-defined customer segments by creating a great experience. And the product features you have meet muster with your competitors. Your price points meet muster with the market. Demonstrating that sets you apart significantly and earns an additional multiple. The next set of questions they will use to attack your value is, well, how does the whole thing work? How does this whole thing happen? How do you deliver this absolutely consistently, reliably, predictably, day after day, week after week, month after month? If you're able to demonstrate and give evidence of the fact that you have got activities organized into sequences with measured outcomes, and you have teams that run and drive these activities consistently and reliably to create the experiences that you have taught me in the positioning of your business. If you can demonstrate that by way of almost a playbook, a working manual, you secure an additional multiple. Their next line of attack to get your valuation down is by asking, well, who will do it all? Because should you exit the business today, tomorrow, who drives it? Who drives the underlying system sets that create that consistent experience for the segments you serve? And if you can show that you have an ability to source the right people, to capacitate people, to include and involve people in how you're building the future of the business out, to demonstrate where you can pass responsibility and reliability and responsibility and leadership to your team, and demonstrate how the team has adopted and taken it on, you secure an additional multiple. Second to last, to secure an exceptional multiple, you can't talk about the potential of growth in the future. You need to be able to demonstrate in the last 2 years leading up to this point in time, you've had exceptional growth increases, both in profitability and in revenue. In demonstrating that, it allows a buyer to forecast growth on the back of the growth you've enjoyed in the last 2 years. And that secures you an additional multiple. The last multiple that has to be gotten is when a final due diligence is done on you in relation to your business. On close inspection, what is your role? Without you there, what happens to your suppliers? What happens to your team? What happens to your customers? What happens to other stakeholders like funders? If you can demonstrate that your role in particular is simply one of relationship management, and you are no longer involved in any of the doing activities in a business, that is to say that without you there, the future of the business will reflect its past. You secure the final multiple. The same said business that was valued at 30 million gets valued now at 80 million. These 5 levers are levers that we all have control of today for a future event that might be 5, 10, 15, 20 years away. Building and designing them into your business today means you're in a situation where you can have your cake and eat it. By that I mean, having them in your business today puts you in a situation where you're optimizing the growth and performance of your business, should you have a 5, 10, 15-year relationship ahead with it. Or should you be wished to look towards an exit, you've maximized the value of your business today as it is today. It's the fundamental difference between building an asset and a job. Failing on these 5 levers has dire consequences for the future. Succeeding in these 5 levers separates you out from an asset to a job. I want to very briefly just talk about how we work with you in growing a business. You know, building a business is very much like sailing a ship. There are a couple of things you need to get right. A ship needs to have a clearly defined destination. Setting sail and going into the deep blue sea without a destination means you can't track your progress to the final destination. It means you can't resource the business. How much food, fuel, and water do you need if you're sailing from Cape Town to London, for example? Without that destination being defined, how do you lead and manage anything? You need a crew, and that crew needs to know what to do, when to do, and how to do it. Because out there in the open sea, the environment changes. There are storms, there are winds that are all unforeseen and unpredictable. Sailing safely means you've got a crew that know exactly what to do, how to do, and when to do it. And then you as a leader in your business have a choice to be in one of 2 places. You can either be in the engine room, which is below decks at the back of the ship over there, driving the propeller, making things happen, generating the revenues, being fundamental on a daily, weekly, monthly basis to sustainability. Or you can capacitate your team to do that, allowing you to spend more time up on the bridge where you navigate towards the final destination. You look at risks and opportunities more strategically, and you spend a significant portion of your time coaching, mentoring, leading, growing your team to get the ship safely from one port to its next. We work very similarly. Should we work together, the first thing we do is we run extensive diagnostics. As mid-tier companies that are established, you have a lot to offer. We need to understand and identify across the systems what's there, what's not. Because an experience with the client is a single experience, it means the 207 activities that create that experience need to be in play and interlinked. We look at numbers and turn numbers into ratios much like a radar system to see what weather lies ahead and what opportunities lie latent within the business itself. We do strategic reviews, which need to be done more frequently now than ever before. Because the environment of business is changing so fast, so quickly, the opportunity to spot the changes, interpret the trends, and position yourself ahead of where the market's going is essential if you want to get ahead fast. And then we do leadership team dynamics, because to the extent that we all learn about ourselves better and we learn about each other as leadership teams, we can work more effectively with each other. With all that work done, we then set the growth goals for the business. Strategic goals, system goals, number goals, and leadership goals. The goal is only a goal, much like the destination of a ship. It needs to be defined and measurable, because to the extent it is, we can track our progress towards it. With that done, we start interpreting the customer groups that we choose to serve in relation to not the product and service, but in relation to the experience they desire. That then defines, through the system of delivery, the activities that need to be put into a sequence that can be taught and trained to a purposeful team in order to maintain a consistent, reliable experience across the board. With that in play, releasing your time as leaders to focus on next level growth, we look to find that growth where not only it focuses on revenues, but leverages the addressable platform you enjoy over here. We do this by working with our facilitators. 13 expert subject matter facilitators work with both you and your team in order to ensure that A, we design and develop the best underlying system sets to deliver on your expectations, goals, and outcomes, that the voice of your entire team is felt and heard, that the systems themselves are co-created by that entire team, meaning it gives ownership and accountability to that team, so that when the system sets are built, these activities are organized, it's the team that drives the business. We work with you on a monthly basis to navigate and track. We left Cape Town Harbour. Are we on track to reach London as anticipated? And to do so, we use a dashboard. We visualize the system of delivery. We demonstrate where delegation and performance is in play and can be optimized. We measure goal attainment, the navigation system to get there. And most importantly, we use some clever algorithms to forecast valuation, scalability, succession, and profitability. Knowing what lies ahead with data that you're driving today is something that a set of books cannot give you. What are the next steps? With 5 minutes to the hour, the next steps are, before we meet with any business, as a global team, we meet and greet. We look at the client that we're intending to meet with, have a conversation with, and we ask ourselves, using the collective minds of our team, based on what we do and how we do it, do we believe we can be of value as a partner to that business? If we believe that's the case, we then find an opportunity to meet and greet with you. We want to learn more about your business. We want to learn especially more about your ambitions. We want to work with you to imagine a future together. What is it that you want to achieve? Is it to scale, grow, and dominate? Is it to grow, deepen the capital value of your business with a view to exit? How would that exit look? How would the growth strategy look? How do you want to achieve it? Why do you want to achieve it? And what does it look like? And we will weigh in and bring the value that we have in contributing to that meeting. From there, if we believe that we will be good partners to each other, we consolidate our relationship in a written proposal. It's detailed, it's costed, and it's used to remove any expectations that aren't true. It closes the gaps on understanding how, as a partner, we would work with you to deliver on that growth outcome that you design. Should that proposal work with you, we haven't started working together yet. We invite you to what we call an InvestCon. And we invite your team to meet with our broader team. It's an opportunity for your team to get a good sense of how we look at business, to get a good chemistry match with us, to understand anything that isn't clearly explained or that might be left still unclear. And it's an opportunity for our broader team to ask two fundamental questions. Should we work together with you? Do we have a good fit? Because we work with growth-minded individuals, it's a particular mindset. And importantly, in doing what we do, will we deliver on your stated hopes and expectations that were shared in this session? If the answer is yes on both sides, we put paperwork in play and we simply start. There are 6 reasons why I think you should do this with us. The first is we would be 100% aligned. When we engage with you, 70% of our fees are based on that growth outcome. We're not selling hours, we're not selling business plans, we're not selling theory, we're not selling fancy diagrams on whiteboards. We're going to sell 13 expert accredited facilitators working not only with you, but your teams to ensure that their voices are brought on board, to ensure that their thinking and insights, along with yours, create the best possible sets of activities that make up the gears of the business, and to ensure that that team itself feels heard, adopted, co-created, and therefore is accountable to drive it. We work right across the board with those facilitators and your teams. It's what drives almost immediate impact. And we do so by sharing the commercial system sets that would take your products and services to market at an accelerated rate through an interlinked set of activities and processes that allow you to foresee risk and manage opportunity with a lot more clarity and deliberation. All of it is anchored in the 5 levers of value. It's absolutely tangible. We turn talk into walk, and that walk generates data. And that data gives us a good indication whether we're navigating to be on track in London or Cape Town when decided. And finally, we select you as much as you select us. After all, partners do that. They work with each other, believing there's value from each contributing party, and they do so through thick and thin. And we have learned the thinness of what COVID offered. Across almost 650 of our clients, we lost one, something we remain very proud of today. Thank you all for giving up time to be with me. I stole an extra 5 minutes. I really look forward to seeing you on the other side of this. Please do engage with our team. Please do, let's meet and greet. There's absolutely nothing to lose and everything to gain. And the time to do it is now.